Good evening, everyone. Venkat, Vikulp, Bhavna, Chetan, Raj, Jyoti, everyone. सर आपने जो डिस्क्रिप्टिव पार्ट शुरू किया था वो बंद क्यों कर दिया? मैंने इस चीज को कल ही एक्सप्लेन किया था, शायद तुमने ध्यान से सुना नहीं। मैंने ये बोला था कि 28 तक का वेट कर लेते हैं. We must wait till then 28. Maybe there will be some more changes, right? Maybe there will be more changes, and accordingly, as per the changes, we will redesign our descriptive part. इसलिए मैंने रोक दिया. Good evening, Manmeet. Good evening. Reference book for economics. Reference for what purpose? Means what kind of the reference you want for RB Grade B or some other exam, like whatever. Good evening, Pranab. अरे सॉरी की जरूरत नहीं है शुभम, just telling you, no need for sorry. Okay. So how many of you had read that article which I have shared today? Anyone who read that article which I have shared today regarding corporate bond market in India? विकुल ऐप पर लाइव क्लास कैसे देखें? मींस फॉर दैट आई थिंक यू शुड टॉक टू द एडमिन और आई विल टॉक टू हिम एंड लेट यू नो. Anyone who studied that article which I have shared? No one. Acha. Jyoti studied. Good evening. Venkat is asking for RBI grade and other competitive exam. Read that article. Means that article is very nice article. They have meticulously quoted all those things. Means whatever the kind of question can be asked in your exam regarding the corporate bond market, all the information are available there. And that is recent article, means it is November 2021 article, but it comprise of all relevant data of 2020-2021 financial year. So you can read that article and it can help you if there will be any question regarding corporate bond market in your descriptive part. It is really helpful, that article. Okay, so we have started the capital market part, right? Capital market. And for capital market, I told you we can divide into two parts. Capital market, one is primary market and other is secondary market, right? Other way of classification is debt market, another is equity market, right? In the debt market, companies do raise the fund while raising through the debt, right? While here in this equity part, they will raise the funds while placing their securities, right? Through their securities, they raise this fund. So primary and secondary and debt and equity means here primary market, primary market, here also primary market, then secondary market. Right. So yes, IPO comes under the primary market. Initial public offering come under the primary market. So when we issue the securities first time, it will go to the primary market. We will issue the securities, then they will go to the primary market. And once from the primary market, they are again going to be under selling and purchasing. That is the secondary market. So anyone can tell me stock exchanges. Stock exchange are part of primary market or secondary market? Stock exchange are part of primary market or secondary market? Answer please. I will explain it later, but just try. Secondary market. Suresh is saying that secondary market. Raj is saying that both. Any other answer? Both. Why both? Those who are saying both, why both? Because NSE and BSE are the depository of shares. IPO primary and trading secondary. Both, I think, because we do IPO also, which is primary, and later on to. So you get the IPO from the stock exchange. Do you get the IPO, initial public offering? Do you get, or people will get the IPO from stock exchange? Or is being directly given by the company? IPO are offered only in the primary market, not in the secondary market. Okay. It is always available company. They can issue what? Debt or equity. Debt security or equity security. Okay. Either they will issue the debt security or they will issue the equity security. So when they will issue, then they will issue. Suppose that it is A and it is B. we are calling debt security as a A and we are calling equity security as a B. So when company is selling that A and B instrument, company is selling that A and B instrument, it is a primary market. So when the money will be raised, means company is going to raise money where? Any company can raise the money in the primary market because they are selling here, right? Once they will sell it, suppose that who purchased this? M has purchased this debt security and N has purchased this equity security, right? So from M, money will go to whom? Company. From N, money will go to whom? Company. So when money directly will go to the company while placing their debt security and equity security, this is called what? This is called primary market. Now M has sold this security to O and N has sold this security to P. So money is transferred from O to M. Money is transferred from O to M and here P to N. So this is what? This is the secondary market. This is the secondary market. Okay. So once you start selling, and now the money will go to whom? From O to M, money is going to whom? Money is going to M. Money is going to N. Right. So money is going to M and N, or not to the company. So this is why this is the secondary market. Right. So M and N, if they are going to hold it, suppose that M is not going to sell, hold it. He is going to hold that debt paper, or N got that equity and he is going to hold it. He is not going to sold it. So it will be remain the part of primary market only because it is not going to the secondary market. When it is going to be resold again, right? Then we will call it as a secondary market. Fine. So stock exchanges are part of secondary market. Naam hi hai na, stock exchanges, exchange where you are going to sell and purchase. So trading will held here. That is why we call trading. What trading means? Trading means selling and purchasing, right? And by selling and purchasing process, we will try to make the profit. Through this selling and purchasing, we will try to make the profit. So how the secondary market work? In the secondary market, those who are participating in the secondary market, they are going to earn profit by trading. Whereas in the primary market, company is going to raise the fund. So primary market is what? Primary market is for the purpose of what? Raising the fund, right? So suppose that I am a part of primary market. Okay, I am a part of primary market, and Indian Oil Corporation or XYZ company. XYZ company is going to the primary market and they are going to sell some debt paper, debt securities, and they are also going to sell some equity securities. And I purchased it. I purchased both equity as well as debt. And while purchasing equity and as well as debt, I invested 5 lakh rupees of mine. Right. I invested 5 lakh rupees of mine. So that money will go to whom? Company. My investment will go to company. Fine. Now I have two options. Either I can hold it and wait for the maturity of this debt paper, and I will wait when company will make profit. Company will share their profit with me because I have a equity of that company. Right. So the 5 lakh investment which I have made, through this 5 lakh investment, I purchased both debt paper as well as equity paper. So I am going to hold both. I'm going to hold both. So if I'm going to hold both, that means what? I have to wait till then the maturity of the debt paper, and I have to wait end of the financial year when the company is going to show that this is our gross profit. After tax, this is our profit, and we are going to share this profit with our shareholders. So one way is to getting profit like this. Other way is कि I have purchased it, right? I have purchased it, then I sold it to other people, right? So when I'm selling that thing to other people in process to make profit, then it is a part of secondary market process, right? Don't go for IPO, CPO, DPO. Just try to understand the basic thing. I will explain IPO and all these things. Right now, just focus what I am explaining. Right? IPO कहाँ होता है, क्या होता है? I will explain you later. But try to understand in the layers. Layer by layer, I will explain each and everything. But try to focus only what I am explaining here right now. What happens with the IPO, LIC IPO, each and everything I will let you know later. So don't jump in that part. LIC 20% of FDI is no. You must have to understand the IPO first. Only then you can ask this kind of the question. It means once you will understand the IPO, there is no need to ask such kind of the question. So Suresh, hold on. So in simple terms, primary is about the long-term investments. If you are going to be remain in the primary market, right, you are going to hold that thing that is for the long-term investments. So if you are participant in the primary market only, if you are a participant of primary market only means you are not going to sell that security again, then you are looking for long-term investments, right? You are looking for long-term investments only, right? But if you are going to purchase that security, right, and you are waiting for a right opportunity when you can sell that thing so that you can earn more money, right? You can earn more money. So then it will be the part of what? It will be the part of secondary market. Okay, so before proceeding, I hope things are clear regarding primary and secondary market. What is FDI? Do you know what is FDI? FDI is foreign direct investments. Investment means what? You are going to purchase or you are going to purchase the shares of company for the purpose of having manufacturing process, right? So you are going to hold the shares of a company for the purpose of what? For the purpose of doing investment in India in order to do the production activity or manufacturing activity in India. So this is called FDI. यहाँ पे प्राइमरी मार्केट कहां से आ गया? Primary market means company will go at some place, right? So company is not coming to the market. Company is directly going to deal with another person, right? After holding, and what if? Then you are going to lose your money. Then you are going to lose your money. Putting the money in the market. What if you are going to sell that? You have purchased that securities. You have purchased that securities, and you are planning to sell it. You are planning to sell it in the secondary market, but the price of IPO was fallen. The price you have paid, suppose that, and for an IPO you paid to 1200 rupees, and you purchased 10 shares of that company, and you have invested 12,000 rupees. And when that share was listed in Bombay Stock Exchange, their price was fallen from 1200 rupees each to 1100 rupees each. Classic example, Paytm. What happened with the Paytm? So when they issued their IPO, so people have purchased it. But when that IPO was listed in the stock exchange, the price start falling. So you lose your money. So whether it is primary market or secondary market, there is always a possibility of what? There is always a possibility of profit and loss. So it doesn't matter. It depends upon your foresightness. how you are good in the calculations, right? How you good are in the calculations, that is going to decide okay, where and how much you are going to make or lose, right? So it's depends, and sometimes calculations also went wrong, right? Sometimes calculation also went wrong, so it's completely, the one word for it is a risk, right? So मिर्जापुर का वो क्लासिक डायलॉग है ना, रिस्क तो है, so both are saying that the risk, right? So the risk is involved here. When you are putting your money here, it is always in the risk. Okay, before moving this primary market, because I have to explain today primary market, then I will move toward the secondary market, stock exchanges and all. First, I have to explain the primary market. But in order to explain the primary market, just have a brief history of market in India, because generally the perception about market all over the India, the perception with respect to market is only to the capital market, until unless you will start preparing for this competitive exams, you do not know कि market means capital market as well as money market, right? So most of the people will understand financial market means capital market, and even many of them, they do not understand capital market, they only understand share market, share market, right? So for the common people's understanding, share market means market. But in the financial literature, market is of two types: capital market and money market, further divided into primary and secondary. And this market activity in India is quite old, right? When the British East India Company started trading in India, so they offer their stocks. They offer their stocks in India, right? And the selling and purchasing of the stocks of East India Company was happening at two places. One was Kolkata and other was at Mumbai, right? So in Mumbai specifically, after 1870s, after 1870, the activity in Mumbai get further strengthened, right? Because in the west coast of the India, like Ahmedabad and other areas, and especially the western coast of India is more fruitful for cotton cultivation. So Western Ghats are more lucrative for the cotton cultivation, right? And the selling and purchasing of that cotton basically held in that area, like Ahmedabad, Surat, Bombay, all these areas, right? And when American Civil War started, then the cotton which was basically coming from America, right? America was stopped to the European countries. So automatically the trade and commerce of cotton was exceeded in the Indian part, right? So that was a phase when the stocks of these companies like East India Company and other trading companies were started, and it starts flourishing, right? So when it starts flourishing, those stocks sales and purchase was done by two kind of the people. One is Europeans who are selling and purchasing the stocks, and other are native people, means Indian people, they are selling their stocks and shares. Vikul and Raj, focus on the lecture if you want to exchange all these things, you can do it separately. But here, please focus on the lecture. What I am telling, if you already know all these things, then it is very good. There is no need to attend the lecture. But if you are attending the lecture, kindly focus on the lecture only rather than doing this kind of the chit chat. Right? Please focus here. Nifty 50 and each and everything, we will discuss it later. When I will discuss that thing, then you will go in this part. Right. So I'm again and again reminding you, Vikulp, if you are not able to focus, then you are not able to crack. I'm telling you very clearly. Right. And not Vikulp to each and every one. You have to be focused. Whatever you are doing, you have to be remain focused only in that area. Otherwise, it is worthless. Don't do it. If you are doing, do it properly. Otherwise, no need to do it. Okay. So, two kind of the people, Europeans and native. Right? Europeans and native, they are doing this activity. What activity? Selling and purchasing of the shares of a company. So natives, most of the times were what? They were neglected by the Europeans. So that is why these native people who are involved in selling and purchasing, they form an organization. They form an organization. See, this is why I was telling yesterday also. This is why I was telling yesterday also. Ki I'm not in favor to open the Telegram. I'm not in favor because I know that ki most of the time people will try to correct the peers, right? So there is no need to correct the peer, right? It is not a kind of company where you are working jointly, right? And what you learn on your own, it is going to be more fruitful than what you are going to learn from others. It is an illusion. It's an illusion what people portray that with the peer kind of the thing, we are going to have more and better way of understanding. That is a classic illusion created by those people who are creating those groups, whether it is Facebook group or the WhatsApp group or the kind of Telegram group, right? This is a kind of what? A marketplace. And whenever we have a marketplace, we want more and more people in the market, right? We want more and more people in the market. So that's why it's a classic way. But peer kind of the thing will work only when you are doing kind of a joint work, right? It's not a thing for particular selection. It is a group selection. In that case, it is going to help. Here, it is not going to help. I'm telling you is whatever experience I have gained since this all social media platforms working, interacting with the students, right, with their success and failure. Recently, UPSC has declared the mains result. They have declared the mains result, and most of the students who clear this time mains from here means they are in touch with me. Most of the students, those who have cleared, most of them, they are the isolated guys. They do not interact too much with the people. They are only focused on their studies, right? They go for limited kind of interaction. They will go to particular platform. They will see something. Okay, it is useful. Take it and start studying that thing. If they will have any doubt, then they will go for the particular person, the experts. Ki please help me there, rather than going for the peer. I'm telling you the fact. Please don't take it otherwise, right? आप ये मत सोचना कि मैं आपको पॉइंट कर रहा हूं, किसी पर्सन को पॉइंट कर रहा हूं. आई एम टेलिंग यू दिस इज द हार्ड फैक्ट. Students do not understand this thing, but it's a hard fact, very hard fact, right? So these things do not sometimes means if there will be some kind of the exceptions are there, but I always believe in what 80% rather than in the 20%, right? I always believe in the 80% what I have seen, right? So this is why it's very important that whatever you are learning, right, on your own or with the help of expert, not me or anyone expert, you have to be focused there, right? And use this platforms where the peers are there or something like that. Use that platform only for the stated objective, clear cut objective. Go there, pick it and back. Don't be stay there, right? And again, I'm not trying to target a particular person. I'm telling the in general thing, ओके नहीं नहीं, अकेला चलो वाला पढ़ाई के लिए है, बाकी आप सोशल रहिए। So they formed and what they formed an native group, and that native group started trading under the banyan tree near the town hall in Mumbai. Right now, where that banyan tree was there, right now you can see the Bombay Stock Exchange. Right, so earlier it was a banyan tree where the stock selling and purchasing was happening. In 1927, they have built up a building. We call today that building as what Bombay Stock Exchange. So in India, it is this kind of capital market trading and selling and purchasing is quite old, right? But again, you know that the policy of the Britishers was only to exploit. They never tried to uh, expand, or they never tried to help any market so that it can help the native people of India. Whatever they did for their own benefits, right? Whatever is going to suitable for them. So in disguised, if that thing is going to help, for example, they developed the railway system in India. So that railway system is not for the purpose of the benefits of the common Indian people. That is for the swift deployment of raw material, finished goods, as well as armed forces. So for that purpose, they have created the railway. So similarly, what they did in India, that was for their own purpose, right? So trading was happening in India under that building in 1927, Bombay Stock Exchange building. Apart from the Bombay, Kolkata, Ahmedabad, many other towns, these stock exchanges were established, right? But trading was happening in the very limited sense. And when in 1947 we got independence, we all know that I explained you during the explanation when I was taking the class on history of Indian economy. I told you that India opted for the socialist kind of the system, right? Socialist kind of the system. Socialist kind of the system. And that is why government of India feel that we must restrict this trading activity or fundraising activity. Trading activity and fundraising activity. As I explained you, ki primary market is for what? Fundraising. Fundraising by companies. And which companies? Especially private companies, right? So in the 1947, government of India feel that we must limit those activities of private firm, and production activity must be under the control of government through government companies, right? So that's why in 1947, Capital Issue Control Act, Capital Issue Control Act 1947 was passed, and with this act, Capital Capital Issue India Authority was created. CII was created. Capital Control Issue. Capital Control Issue Authority of India, CCI, was established. Right. Today you see what? SEBI. In 1947, it was CCI was created. And what was the objective of CCI? CCI's objective was, suppose that any company like XYZ is a company, and this company want to raise fund, right? For example, if today XYZ want to raise the fund from 1992 onwards, if XYZ want to raise the fund, they can go for IPO, right? Similarly, from 1947 to 1992, if they want to raise the fund, they first go to where? Capital Control Authority of India, right? Control Authority of India, they have to go there, and Capital Control Authority of India is going to fix each and everything. How many shares? What will be the price, right? And what will be the stated objective? Each and everything is going to be decided by whom? Each and everything is going to be decided by this authority. They are going to fix each and everything. So that is why it was quite discouraging from the for the private companies. Private companies, because you need a fund of what? Suppose that you need a fund of 100 crore, but CCI said that no, you cannot raise the fund more than 50 crores. So you can issue the equity or shares or IPO, whatever you want to issue. You cannot go for more than 50 crores. Now you said that okay, I'm not going to issue equity. I will issue the bond. That means debt. I will raise the debt. So again, you have to go where? CCI. CCI is going to first decide what will be the amount of debt you can raise. Second, they are going to fix the maturity. It is going to be 1 year, 3 year, or 5 year, and what interest rate you can offer, minimum and maximum, they are going to fix. So this is how it was very difficult to do the business for private people in India during this phase. So you cannot raise this money from the market. You cannot raise this money from the market. In that way, market was very difficult, right? So this thing happened from 1947 till then 1992. In 1988, in 1988, SEBI was established through an executive order. Executive order means Government of India has taken a resolution, and with that resolution, SEBI was established, right, in 1988. That means what? SEBI functions are decided by the government of the day. Whosoever in the government, they will decide what SEBI can do and what SEBI cannot do. Right. That means effectively whosoever is the Prime Minister and Finance Minister, they are going to fix the functioning of SEBI. They are going to manipulate or they are going to dictate SEBI. So from 1998 till then 1991, SEBI functioned in the similar manner. In 1992, SEBI got statutory power. Statutory power means a bill was presented in the parliament, and through that bill, SEBI Act was passed in 1992, and SEBI got the statutory power, right? So SEBI got the statutory power. However, this act, which act? Capital Issue Control Act was there. So this act was repealed. This act was repealed. Repealed means what? That act was taken back by the government and it became null and void. It became null and void. Null and void means what it means that null and void means now companies companies are free. Just give me a minute. Just give me a minute. So in 1992, this act was repealed. Now companies are free. Companies are free to decide how much equity they want to offer. Whatever the equity or shares they want to offer, they can decide. Right? Price they can decide. Similarly, if they want to raise the debt, they can decide what amount of debt we can raise, right? What amount of debt we can raise and what amount of the interest rate we can offer, right? So this act was repealed. What was the objective? To make this trading in the capital market free for the fundraising as well as trading in the secondary market. It become free. However, at the same time, when you are making them free, right? So if company is going to raise money from the public, right? If company is going to raise the money from the public through market, through capital market, then company must have the ability to repay. Okay, if a company is going to offer their shares, why people are going to purchase those shares? People are going to purchase those shares, either they can make the profit through dividend or they can sell those shares in the secondary market and make some profit, right? So this is the objective why people are ready to invest their money in the capital market. So it is a responsibility of an organization who is looking over that business to make sure that those companies who are now free to raise fund through equity or debt, they are free to raise the equity or debt. They must have the credibility, right? So they must have the credibility. So that is why under SEBI Act, some statutory power was granted to SEBI to look over that process. To look over that process means what? SEBI is not going to decide. SEBI is not going to decide how much IPO you can issue. It is not going to decide. But SEBI is going to look in the process. If SEBI feels that, okay, the amount of IPO you are offering, right? So explain the reason why you are offering this amount. So you must give the proper explanation. And if SEBI feels that the explanation is not reasonable, rational, and proper, then SEBI will revert you back. It is not right. You have come back again. This amount is incorrect. SEBI is not going to say that no, not this amount, this amount. SEBI is going to make sure that whatever you are quoting, that should be reasonable and proper and should not be incorrect. So SEBI is going to look all over the process. So there is a difference between the functioning of CCI and SEBI. People feel that no, the work was transferred from CCI to SEBI. No, CCI was having a different role. That was completely kind of an organization who have a strict control of each and everything, right? SEBI's work is to make it rational, proper, and fair. Rational, proper, and fair. So there must be fair practice. There must be fair practice by the firms who seeks fund through equity and debt. So that is why even if LIC, which is a government-owned company, right? LIC is a government-owned company and they want to enter in the market through their IPO. They must follow all terms and conditions which is mentioned there to issue the IPO, and SEBI is going to scrutinize properly, thoroughly. So this is why it's very important to make SEBI an independent organization, which was done in 1992, right? So here SEBI play an important role, right? Because when the IPO of a company is going to hit the market, when the IPO of SEBI is going to hit the market, IPO of LIC is going to hit the market, and if there will be any problem, for example, recently Paytm. The Paytm is an example. Lot of people are questioning why SEBI has allowed the Paytm to issue the IPO. Lot of question marks are being raised. Why SEBI has allowed? Because what is happening? SEBI is allowed to Paytm to offer their IPO, and since their IPO was came, and after IPO when it was listed in the Bombay Stock Exchange, their price are continuously decreasing and decreasing. Right. So SEBI, I think, means some people's opinion, not my opinion, what they are saying that SEBI must not allowed, and if have allowed, there must be strict terms and conditions. So SEBI must have to look back the process through which it is allowing. Right. So what I have explained till then now, is it clear? Any doubt or question in your mind in that regard, what I have explained till then now? Tell me quickly. अरे समझ में आया कि नहीं आया ये तो बताओ. ओके, ठीक है. तो टू मेक यू अंडरस्टैंड फर्दर अबाउट प्राइमरी मार्केट, अच्छा प्लीज go slow from here, right? Maybe there will be a butterfly in the stomach and you want to know and you have a curiosity, and that curiosity is completely understood. I understand that curiosity, right? But please go step by step from here, right? If you will follow step by step from here with me, definitely it is going to help you. Just give me a second. Okay. Okay, so step by step, I will explain each and everything. Still, if you have anything in your mind which is bothering you, you can ask, don't worry. But I will request you, be slow and be step by step. You will understand each and everything. And you know me, whenever I will explain thoroughly. So, but here I understand this topic is having extraordinary curiosity in your mind, right? So that's why I'm just telling you, in order to understand, have patience. So, primary market, right? So, we are taking example of company A, right? So, company A, as they want to raise the fund, they have two options. Either they can go for equity sale, or they can go for what? They can go for debt raising. So first we will understand how the equity sale will happen. So they have decided that we will go for selling of our equities in order to raise the fund. Those people who do not understand what is the difference between equity and shares, they got confused many times. Is it two are the different thing or the same thing? Sometimes they are used interchangeably. For them, 10% is divided into 50 lakh. 10% equity is divided into 50 lakh shares. One share is price of suppose 100 rupees, right? So when it is divided into the small pieces, when it is divided into the small pieces, we generally use the term share. And when you are going to combine it, we will call it as a equity. So actually both are same, but one represent equity represent the bundled amount, and share represent the single part of that. So that's why they are sometimes used interchangeably and sometimes they are used at particular place only, right? So for companies, they are selling 10% equity, 2% equity, 3% equity. Whereas when the investors, those who have the shares and equity, they are using 100 shares or 200 shares. I hold 5,000 shares of that company, 10,000 shares of that company, or 1 lakh shares of that company. So they talk in terms of what? Shares. They talk in terms of shares. Whereas companies generally, when we discuss about the company, they talk in terms of equity more rather than shares, right? However, in the financial literature, like in the newspapers and magazines, sometimes they also used to write 10% share. 10% share, they are going to sell it off, right? So don't be confused, they are actually more or less same term, but for just your more clarity, this is what we use the term here. 10% equity is more appropriate term. It doesn't mean that if you are using 10% share, it is wrong. No, it is not wrong, right? It is right. Sometimes people say that entrepreneurship, right? Entrepreneur or entrepreneur. So if you are saying entrepreneur, it is not wrong. It's based on accent of different part. For example, when British will say that, if this word is announced by the British, so British will emphasize on the last word, king. So they are focused on ing, ing, whereas the US king. So they are going to focus on the first letter, right? So for example, president. So their focus is on dent, right? Dent. Whereas president. So US people are going to focus on first few words, right? So both are right. So similarly, like here also, what equity and shares, they are used interchangeably. Don't get confused. And when this word come in India, president, right? So different accents, right? So similarly, sometimes here in the financial market, things are being used interchangeably. No need to be confused. Fine. Okay. So company A has decided to raise the fund through equity sale, right? Through equity sale. So now how they can sell their equity, right? How they can sell their equity. For that, for you, is it visible properly? Is it properly visible to you? Okay. So primary issue. So for a company, they have three options. Either they can go for public issue, right? Or they can go for right issue, or they can go for private placement, right? So there are the three options for them. Either they can go for public issue, or they can go for right issue, or they can go for private placement, right? So first understand what is see here three kind of the way they can sell their equity. I told you what company has decided. Here I told you there was a company A and they decided to go for equity sale in order to raise the fund, right? So when they want to raise the fund through equity sale, they have three kind of the options available. One is public issue, another is right issue, and third is private placement. Three ways are available for them, right? First, we are going to focus on what? First, we are going to focus on this initial public offering. First, we will understand this initial public offering, then we will come to all these other options, right? Then we will move to, we have three options, but first we will understand the initial public offering, then FPO and right issues, private placement, all these things we will understand it later, because the understanding of IPO, how it works, it's more important than any other thing. Okay, and it is little bit more exhaustive and complicated to understand in comparison to all these three other two options. These options are quite easy and simple once you will understand the IPO. FPO and other things are not very difficult. It's quite easier to understand. But IPO building, it's a little bit complicated to understand, right? That's why I will emphasize we must go through step by step. So, of three options, what options? These three options: private placement, right issue, and public issue, right? Private placement, right issues, and third is public placement. Company decided for this option. Company decided for this option. Fine. So, in India, from 1947 to 1992, that was under CCI. But from 1992 onwards, who supervised this work? SEBI. SEBI will supervise. Though company is free, but SEBI will supervise. Okay. So public placement, and in public placement, we have went for initial public offering. Just give me a second. Initial public offering. So, for the initial public offering, how this process will start? Actually, when we say the primary market, we have three participants in the primary market. One is issuer, who is issuing its security. And so in this case, who is the issuer? Issuer is company A, right? Then there are intermediaries, and then is investors. So issuer is a company, investor in the primary market, and there are intermediary. Now question is, who are these intermediaries? The prominent intermediary is merchant bank. So in the primary market, there are the three kind of the participant. One is issuer, second is intermediary, and third is investor. Right? Issuer, we know that who is company. Right? Now the intermediary, and I use the term merchant bank. So obviously question arises, sir, what is merchant bank? So rather than providing the definition, I will explain its function, and while explaining its function, you will automatically know that what is the work of merchant bank and who they are, right? So who they are and what they do and what is the definition, all and each and everything you are going to understand by understanding their function. So company A is going to contact what? Merchant bank. So many times you have seen that from IIM Ahmedabad, that student got the salary package of what? Salary package of 2 crores, 5 crores, something, some kind of the news come every year on this package, on that package. If you will read those news in detail, you will find that most of the time, not every time, but most of the time, they are hired by these merchant banks. Goldman Sachs, they are merchant bank, right? And even in case of LIC, for LIC IPO, government has appointed 10 merchant banks, not one merchant bank, 10 merchant banks were appointed by the government for IPO. So you can understand how they are important, right? How they are important and how they play a very crucial role, right? So company A went to the merchant bank and they said that we want to sell our equity, and through the sale of equity we want to raise the fund, right? Through the equity sale. uh, So company A went to the merchant bank and they said that we want to raise the fund. So how much you can raise, what will be the price, what are the steps you have to follow in order to fulfill the SEBI terms and condition. All these work will be done by these intermediaries, merchant bank. So when people say that Paytm, for example, I'm taking the example of Paytm. So Paytm is going to list, Paytm is going for IPO, right? So Paytm board has decided, example, Paytm board or company A board has decided, you can consider A as a Paytm. So their company board has decided to offload or sell 10% equity, right? So now with the sale of 10% equity, how much maximum amount we can fetch? How much maximum amount we can fetch and how we can convince SEBI, right? How we can convince SEBI, what it means that how we can fulfill all the requirements put forward by the SEBI in order to get yes from SEBI to issue our IPO. So you need approval of SEBI to issue your IPO, right? So how to get that approval? Number one. Number two, when you are going to offer your IPO, right? It must be attractive so that people can show their interest. So how the marketing, advertisement, road shows can be done, that is going to be decided by whom? That is going to be the work of merchant bank, right? What amount of the equity or share will be there? For example, I told you that 10% equity is going to be 50 lakh shares, right? It should be 50 lakh shares or 5 crore shares or 5 lakh shares. 10% can be equally divided into 5 lakh equal pieces, 5 crore equal pieces, or 50 lakh equal pieces of the share. Who will decide? It is going to be decided by merchant bank. Decided means they will suggest the company ki in this way you should go, in that way you should go. So here all the background work is done by the intermediary, that is merchant bank, right? And obviously if they are going to do such amount of work, then they are going to charge also, right? So suppose that ki company is expecting 2000 crores 2000 crores by selling their 10%. So they must have to give certain fees. Number one, fees to merchant bank and some commission to merchant bank. So fees plus commission must have to be paid to the merchant bank. And we will go to that merchant bank who is the most efficient merchant bank. And when the merchant bank is going to be more efficient, with the more efficient workforce, right? And who is the more efficient workforce, who have very good analytical skill about the financial markets functioning, and they are very quick and adaptive learners. And who they are? The people who do the management course from the top management institutions, or they are from topmost IITs, right? So they are from topmost IITs, so they will be hired. Even I have seen that one of my friend, he was a mechanical engineer from IIT Kanpur, and he was hired by the Goldman Sachs, mechanical engineer, right? So they simply said that we will train him. We know that if we are hiring him, we need only 6 months training for those kind of the talented people. We will give the 6 month training and he can do that thing, right? So they most of the time hiring in this IITs sometimes happen in that way also. So maybe that is bank and they are going to hire. Most of the time their hiring will come from the IMs, but even from the prominent institute like IITs, they also hire from there also, right? So I hope you got the understanding about what merchant bank is. Is it clear what is merchant bank and what they do? Okay, so this merchant bank is going to create a draft. They are going to create a draft, right? In this draft, they are going to mention what is the reason for this IPO. The IPO which we are going to launch, what is the purpose? Vision of company, right? Financial statements of company means how much profit and how much dividend they have paid, whatever the financial activities, net worth, right? All these things they are going to mention here, right? So primarily all these things you have to put, right? And you have to prepare it, all these things. We will call this process as book building process. book building process, right? Book building process. So what is the book building process? Merchant bank will create a profiling, right? Merchant bank will create a profiling of that company, each and everything he is going to mention there. And in the book building, they will do all these activity, and that book is going to present to whom? That book is going to present to SEBI for approval. Approval for what? SEBI will see these all these book, and SEBI will approve or disapprove your IPO process. Yes, you can go for the IPO or you cannot go for the IPO. On the basis of this book building, they are going to do, right? So understood what is the book building? Book building is a process in which company is going to do this thing with the help of merchant bank. But here, one important thing I have not mentioned you here under the book building process. I told you what? I told you from 1992, company is free. Company is free to sell how much equity they want to sell, what amount of equity, price of that equity, each and everything is going to be decided by whom? Each and everything is going to be decided by whom? Company itself, right? And company was doing this thing with the help of merchant bank. So company and merchant bank was doing this process, right? And this process, what they do, they offer what? Particular amount of equity at particular price, right? Particular amount of equity at particular amount of price. For example, 50 lakh shares, each share at 10 rupees, right? We are going to offer 10% equity, 10% equity equal to 50 lakh shares, and price of each share is going to be what? Is going to be 10 rupees. That means through IPO, how much you can raise? 5 crore. How much you can raise? You can raise 5 crore. So this was the process opted when CCI was abolished. So this process was opted. In this process, companies with the help of merchant bank, they will fix the price. They will fix the price of each IPO, and then they take the approval of SEBI, right? They take the approval of SEBI, and once SEBI is going to allow, they are going to offer their IPO as first come first serve service basis, ki whosoever is going to purchase. But in this process, there was a lot of discrepancy. And sometimes what happened, through manipulations, company and merchant banks, they try to what? They try to disguise the investors, right? So that's why after studying a lot of things, SEBI has decided, while going for while going to public for raising the fund, you should follow the book building process, and in this, share and its price must be discovered through demand and supply. Through demand and supply. What it means that? It means that while doing the book building, you should do each and every step. This step, this step, this step means what are the reasons for IPO, what is the vision of a company, financial statement, each and everything, right? But you are not going to disclose, you are not going to disclose the amount of what, the amount of equity and the price of each and every equity, or the amount of share you are going to offer and what is the price of each share. You are not going to tell the public, right? Let the public decide through what subscription. So how much subscription is going to be there. After that, you can give a kind of threshold. Okay, this is the amount of share and this is the amount of, or this is the amount for each and every share. Again, in 1992, when CCI was abolished, company and merchant bank was told ki, okay, you can go for freely deciding of the price of equity. So what merchant bank and company was doing, they are doing this ki, this is the price of each and every IPO, right? Initial public offering, the each and every share have this price and total number of shares are this, right? So they, even before going to sell that shares, they already declare कि this is the number of shares we are going to offer and this is the number of, see, you can tell 10% equity we are going to offer, but that 10% equity is going to be 50 lakh shares or 5 crore shares or 50 crore shares. Price will be 10 rupees, price will be 20 rupees, or price will be whatever. This is not you are going to tell. That should be discovered through this process, right? Let the public decide, right? Why? Because in this process, there was a lot of manipulations. When merchant bank and companies, they'll try to disguise, right? They try to disguise, number one problem. Number two problem, sometimes you are anticipating what? Ki I can raise only 5 crore. You are anticipating you can raise how much? With 10% equity. With the merchant bank and company, they thought that ki, okay, with the 10% equity, we can divide into 10 lakh, 50 lakh shares and we will set the price of 10 rupees, right? But when that 50 lakh shares, when this 50 lakh shares was sold out within a 5 minute, within a 5 minute, then company and merchant bank thought that कि यार नुकसान हो गया, तगड़ा वाला नुकसान हुआ है. If we have offered 10% equity in terms of 50 crore shares, even at the price of 10 rupees, maybe we can get 500 crores rupees funding, right? So this is why, for the sake of helping both company who is in the market to raise the fund and the investor who want to invest his money in the market, both, right? For both benefit, SEBI has started this book building process. You should go for book building, and in the book building you have to do this process, right? You have to do this process. So is book building is clear? What is book building? Let me know quickly. Okay, now I told you this book building. This book building is happened at what stage? It happened at the stage of company and merchant bank. So this book building, which is prepared by company through merchant bank, is going to be presented at SEBI, right? And once SEBI is going to approve, okay, you can go ahead. Then you have to present. Then you have to present a kind of presentation. Then you have to go for kind of presentation. What presentation? You have to present all these things. Whatever the process you have followed here, na, this process from SEBI, you have to present this draft to public. This draft you have to present the public, and we called it as a, कोई बताएगा मुझे? Can anybody tell me what we called it? That draft. Can anybody tell me the draft which is going to present the public? DRHP. I don't know what DRHP means. Can you elaborate what does DRHP means? Okay, I got it. Don't other people will also know that. Don't do it. Let the other try. Let other people try. बता ही दिया. Okay, this is known as red herring prospectus, and it is in the draft phase. That is why it is known as draft red herring prospectus, right? So it is known as draft red herring prospectus. So this draft red herring prospectus is going to present to the public. Now question is why it is called a red herring, right? Red herring. The point is whenever you are going to write an exam, right? So when you will write your exam, your copy is evaluated, and generally while evaluating the copy, what ink is being used? Red ink. So that red ink is wherever that red ink is going to be used, right? So it is a crucial thing. So that's why generally it is called a red herring. Red herring means you have to focus all these terms and conditions, then think whether I should invest in the IPO or not. So to public, you have to inform what is your objective, what all these things, why you are doing, what was your past, means in past what you did, right? And what is your vision. All these things you have to present to the public. In the leading newspaper, magazines, you have to issue the red herring prospectus, right? So red herring prospectus you have to present, right? And that red herring prospectus is going with the public, right? So most of the people, what they are doing right now, they are just going by कि ठीक है यार, चलो इसका IPO ले लेते हैं, उसका IPO ले लेते हैं, right? Go for this IPO, go for that IPO, without going into the detail, right? But generally, who are the good analysts? Those who are good analysts, they read all these things. But reading that thing, number one, that is exhaustive. Number one. Number two, you must have a good analytical skills, right? So those who are just inspired while watching the Harshad Mehta series and all, the share market have a lot of prospect. Maybe market is rising right now, so maybe you are making some money. But if you are not reading it properly, you are just doing on the basis of speculations rather than proper calculations, maybe you are either going to make huge profit at a point of time, or you are going to make a huge loss at a point of time. Whereas those people who are most of the time they are calculative, right? So if they are more calculative, they are reading all those things. So with them, there is a less probability. I'm not saying it is not possible, but I'm saying that there is a less probability of having huge profit at a sudden or huge loss at a sudden. There is a possibility, but that possibility is little because they understand and accordingly they do their trading. Okay, so this is the red herring prospectus. Now, suppose that the company is a big company, right? Company is a big company and it is well-known company. Fine. So everybody is going to interested. For example, the case of LIC. So LIC, everybody know that yaar, ki that is one of the profitable company and having the big experience. But what about if the company is not so prominent in the public domain? Company is not prominent in the public domain. So who is going to purchase? Right? Who is going to the purchase? So for example, I hope you have seen this thing on the streets in India, right? Especially for the street food. There is a street food shop M and N, two street food shop, right? Here, three people are standing and they are eating in front of that street food shop. Whereas in front of the street food shop, there are many people standing here and they are eating, right? So you want to eat, what will be your first choice? What will be the first choice? Maybe some people think that ki, okay, in this shop M, in the M shop, I need not to waste more time because only three people are standing there. I will get food easily. So maybe some people are going to follow this approach to go M. Whereas most of the people will go to shop N because they have this kind of the prediction in their mind. A lot of people are eating here. That means what? That means that food street food shop have better taste and quality of the food, right? So similarly, when you are new in the market, you are first time coming and you are not so prominent. So in order to fetch money from your IPO, you need anchor investor. You need an anchor investor, right? So for example, if it is like that, Star Health Insurance, they are coming with the equity, they are going to come with what, their IPO. So are yaar, who is a Star Health, who's Star Health, right? But all of a sudden you got this information ki in Star Health, who is the anchor investor? Can anybody tell me who is the anchor investor in Star Health? Who is the anchor in the Star Health? इनका नाम सुना है आप लोगों ने? I hope you have heard this name. What about self arbitrage prospectus? Is all are same. That is the different category under the red herring prospectus. That is a different categorization. So one category is self arbitrage prospectus, but you need not to go in such a detail because this is not an exam of a particular financial market kind of the thing. Means it's not an exam of trading exam, like you are not going for the BSc and CSE kind of the thing. So no need to go in such a depth. So he is known as a big bull of India right now, na? Rakesh Jhunjhunwala. So he is an anchor investor in Star Health. So once you will know that ki such a kind of prominent investor is already an investor in that company, is already investor in that company, because before the IPO, company said that ki the 2% is going to be held by whom? Bharat Jhunjhunwala. Sorry, Rakesh Jhunjhunwala. Right. So Rakesh Jhunjhunwala is having the 2% equity already in this company. So once you will know that he already have 2% equity in this company, that means what? Putting the money in this company is going to be more profitable, right? So less risk. So in order to push IPOs, sometimes we need what? Sometimes we need anchor investor. Right. So once you will see that there is a prominent person or company as an anchor investor, Ratan Tata is an anchor investor in particular company, right? Or Tata Group is an anchor investor in that particular company. So that is going to create your confidence, means that is going to boost your confidence and morale to invest in the IPO of that company, right? So this is why it is very important. So who are the anchor investor? I hope it is clear. Okay. So, anchor investor is clear. You have presented your red herring prospectus, right? You have presented your red herring prospectus, and now you have to put your equity for the purpose of public, right? So, you can present it to the public for that purpose. So, this is the process which we have to follow for this IPO. Clear? With anchor investor, it is clear. Okay, just give me a second. Okay, so I have to go somewhere immediately, and that's why I have to wind up this class right now. I'm sorry because I have to go. I have no option, so that's why I have to wind up this class right now. I will cover it up in the next class, and next class I will try to have at 8 p.m. only rather than 8:30. Okay, so I'm sorry, I have to wind up this class right now. Sorry for this, but I have no option.